Okay, let's dive into some really interesting source material we've put together just for you.
Yeah, we're zooming in on Broadcom today. Ticker's AVGO.
Specifically, what Wall Street is, thinking ahead of their upcoming earnings.
And what that might tell us about their role in this huge AI market everyone's watching.
Our mission here is basically to unpack those key expectations.
Right. Cut through the noise, see what the analysts are saying, the sentiment.
And figure out what these numbers actually suggest about Broadcom and AI.
And there's this fascinating point that jumps out from the sources, isn't there?
Definitely, I saw that too. It's this, apparent contradiction.
Yeah, explain that.
Well, you've got these, really strong growth expectations, especially driven by AI, right? Everyone seems to agree on that.
Strong growth.
But then the consensus stock price target, it suggests pretty limited upside, like right now.
Which feels weird. Why the disconnect? That's kind of the core question we're digging into.
Exactly. So let's start with the timing. The big event is their earnings report.
Right, fiscal second quarter. It's coming up after the market closes this Thursday.
So everyone's waiting on those numbers.
And looking at the consensus data from Visible Alpha, tracking the analysts.
The numbers look pretty solid. Expected revenue, what was it, $15.02 billion?
Yeah, just over $15 billion. And that's projected to be a 20% increase compared to last year.
20% year over year. That's significant growth.
It really is. And adjusted net income, that's also expected to jump quite a bit.
From what, about $5.4 billion last year?
It's a $7.8 billion forecasted for this quarter, a substantial rise.
Okay, strong top and bottom line growth expected. But then there's the AI piece.
Ah, yes, the AI revenue. That's where it gets really interesting and feeds into that tension you mentioned.
It's the number everyone wants to see these days.
Totally. And analysts expect it to climb sharply. $4.42 billion is the forecast.
$4.4 billion just from AI. Wow. And how does that compare?
Well, think about this. That's 42% growth year over year. 42%. And even sequentially from the last quarter, it's up 7%. So AI is clearly maybe the major growth engine here.
Okay. 42% AI growth, 20% overall revenue growth. You'd think analysts would be just universally screaming buy, right?
And, well, they kind of are in terms of ratings. The sources show that out of 14 analysts tracked, 13 have a buy or equivalent.
13 out of 14, that's almost unanimous, only one hold.
Exactly. Overwhelmingly positive recommendations.
And here's that contradiction again.
Right. Despite all that positive sentiment, all those buy ratings, the consensus price target, according to these sources, is only around $247.
$247.
Yeah.
And based on Friday's price, where the stock closed, that implies what, only about 2% upside from here?
Just 2%. It feels really modest, doesn't it? Especially next to those growth forecasts and buy ratings.
It really does. So it makes you wonder, what's holding those price targets back if the fundamentals in the AI story seem so strong?
That's the puzzle. And the source material gives us some clues through specific analyst comments. There are different shades of opinion.
Like Oppenheimer, for instance. They seemed quite bullish.
Very bullish. They actually called Broadcom the two AI franchise after NVIDIA. That's a big claim.
Wow, number 2 after NVIDIA.
Yeah. And they raised their price target, said they remain long-term buyers.
What was their reasoning?
They pointed not just to AI, but also to Broadcom's other strong businesses: networking, wireless, broadband, server storage, software. These core franchises, they argue, support sustainable growth.
Okay, so Oppenheimer sees the AI potential plus a solid foundation elsewhere. Makes sense.
But then you have a slightly more maybe cautious view, like from Morgan Stanley.
What did they say? Still positive on AI?
Yes, they said they are positive on Broadcom in the AI space, so they acknowledged the strength there. But they also added, notably, that they were, quote, hard-pressed to generate additional enthusiasm, especially right after NVIDIA put up such monster numbers.
Okay, so maybe a bit of, compared to NVIDIA, shadowing things, or feeling like the good news is priced in?
Could be either or both. It suggests maybe some analysts think, even with Broadcom doing well, the bar is incredibly high, or perhaps the valuation already reflects a lot of the optimism.
And how has the stock actually done this year?
It's up, but maybe not spectacularly. Just over 4% gain so far in 2025. Based on the sources.
So some positive movement, but not an explosion, and the targets aren't predicting one short term either.
Precisely. It looks like analysts are trying to balance that clear AI growth and the solid core business.
Against maybe valuation concerns or peer comparisons or just some general near-term caution.
Exactly. So for you listening, what does this all mean?
Well, it shows Broadcom is definitely a key player in AI chips, no doubt about that.
But this dive into the analyst expectations highlights just how tricky it is to value these companies right now.
Yeah, you see this strong agreement on growth, especially AI growth.
But then it translates into price targets, suggesting quite different things about the immediate stock potential. Leads to that tension.
So the key takeaway really is that apparent contradiction.
You got it. Strong expected results, booming AI growth, nearly all analysts saying buy.
Yet the average price target suggests the stock doesn't have much room to run, like right away.
It leaves you with a really interesting thought to chew on, doesn't it?
Definitely. If Broadcom is set for this kind of robust AI growth and has these strong underlying businesses everyone likes,
Why does the collective wisdom, despite the buy ratings, seem to think the stock's near-term upside is so capped?
what factors specifically might be putting a ceiling on those price targets right now? Something for you to consider.